The cryptocurrency market is experiencing unprecedented shifts, with Bitcoin surging past $80,000. Meanwhile, regulatory changes are stirring debates across the globe. Here are today's top 10 stories you need to know. Recent developments in the cryptocurrency exchange-traded fund (ETF) landscape have captured the attention of investors and regulators alike. Major financial institutions are increasingly exploring the potential of cryptocurrency ETFs, which aim to simplify access to digital assets for both retail and institutional investors. This surge in interest stems from the desire for a regulated investment vehicle that could mitigate some of the risks associated with direct cryptocurrency purchases. However, regulatory challenges persist, with different countries adopting varied stances on approval. Experts believe that the greenlighting of cryptocurrency ETFs could lead to a significant influx of capital into the crypto market, potentially stabilizing prices and increasing mainstream adoption. As stakeholders anticipate further regulatory clarity, the next few months will be crucial in determining the future of cryptocurrency investments. The cryptocurrency market continues to experience significant volatility, with prices fluctuating sharply as investors react to a series of recent developments. This turbulence is primarily driven by external factors, including regulatory news from major economies, which has instigated uncertainty among traders. Additionally, internal market dynamics, such as changes in trading volume and liquidity, are exacerbating these fluctuations. Analysts underscore the importance of grasping market sentiment and the psychological factors that influence investor behavior during such unpredictable times. As volatility persists, effective risk management strategies have become crucial for both traders and investors seeking to navigate these choppy waters. The current landscape necessitates an acute awareness of potential risks and emerging opportunities. Looking ahead, all eyes will be on upcoming regulatory announcements and economic indicators, which will likely play a pivotal role in shaping the market's trajectory in the near term. Senator Elizabeth Warren is intensifying her scrutiny of Meta's stablecoin initiatives, demanding greater transparency amid rising concerns about market manipulation and consumer protection. This call comes as lawmakers increasingly worry about the growing power of major tech corporations in the cryptocurrency landscape, where innovations can outpace regulatory frameworks. Stablecoins, designed to maintain a fixed value, have garnered attention for their potential to disrupt traditional financial systems. Warren's push for accountability could lead to significant regulatory changes that may reshape how these digital assets operate. The ramifications of her advocacy extend beyond Meta, potentially influencing broader cryptocurrency policies and setting a precedent for other tech giants. As the regulatory conversation heats up, stakeholders, including investors and consumers, must remain vigilant and adaptable. With the potential for new regulations on the horizon, the future of stablecoins and their role in the financial ecosystem will depend on how policymakers respond to these emerging challenges. XRP, the cryptocurrency associated with Ripple, has recently attracted significant investment, signaling a growing confidence among investors. This surge in interest comes on the heels of Ripple's ongoing developments and partnerships, which aim to enhance its utility and market presence. Notably, Ripple has been collaborating with various financial institutions to streamline cross-border payment processes, a sector ripe for disruption. Analysts suggest that these strategic moves could position XRP as a leading player in the cryptocurrency space. The influx of investment has sparked discussions about XRP's future potential and its role in the evolving financial ecosystem, especially as traditional banking systems seek innovative solutions. As Ripple continues to expand its partnerships, the implications for XRP and its investors could be substantial, potentially driving further adoption and price appreciation. Looking ahead, the continued evolution of Ripple's initiatives and their adoption by mainstream financial entities will be pivotal in determining XRP's trajectory in the competitive cryptocurrency market. Venture capitalist Tim Draper has proposed a new bill aimed at helping U.S. businesses operate using Bitcoin. This legislative move seeks to promote cryptocurrency usage in everyday transactions, potentially revolutionizing financial interactions. Draper, a well-known advocate for digital currencies, believes that the bill could significantly enhance economic growth by fostering innovation within the financial sector. Historically, the U.S. has approached cryptocurrency with caution, balancing the need for regulation while encouraging technological advancement. Supporters of Draper's proposal argue that it could modernize outdated financial practices and enhance the global competitiveness of American businesses. However, critics raise concerns about the regulatory implications and the potential for increased volatility in the market. As discussions unfold, the bill represents a crucial step toward broader acceptance of Bitcoin among businesses. If passed, this legislation could reshape the landscape of cryptocurrency in the U.S., setting a precedent for future regulatory frameworks and encouraging other nations to consider similar measures. The next few months will be pivotal in determining the bill's fate. Coinbase, one of the leading cryptocurrency exchanges, has reported its second consecutive quarterly loss, raising significant concerns among investors. This downturn is largely attributed to the ongoing market volatility and intensified competition within the cryptocurrency exchange sector. Over the past few months, the digital currency market has experienced wild price fluctuations, making it difficult for platforms like Coinbase, which primarily rely on transaction fees for revenue. Analysts suggest that these struggles underscore the challenges inherent in a rapidly evolving market, where new exchanges continuously emerge, offering innovative services and lower fees. As a result, maintaining competitiveness has become increasingly crucial for Coinbase's survival. Investors are now scrutinizing the company's long-term strategy and are eager to understand how it plans to adapt to these changing dynamics. The implications of this financial report could significantly impact investor confidence and influence future investment decisions across the cryptocurrency landscape. As Coinbase seeks to navigate these turbulent waters, its next strategic moves will be pivotal in determining its future stability and growth in an increasingly crowded market. In the tech sector, Intel's stock has reached an all-time high, driven by its increased focus on blockchain technology and cryptocurrency mining hardware. This surge reflects a growing demand for innovative computing solutions that support cryptocurrency transactions and mining operations. With the rise of decentralized finance and non-fungible tokens, the need for robust computing power has never been greater. Analysts attribute this rise to Intel's strategic investments in cutting-edge technology, positioning the company as a key player in the blockchain ecosystem. As the demand for cryptocurrencies continues to rise, companies like Intel are pivoting to capitalize on this trend, creating new opportunities for revenue growth. The implications of this development could reshape the tech landscape, particularly affecting hardware production and cryptocurrency efficiency. Investors are keenly watching how Intel's advancements will influence broader market dynamics, especially in the realm of cryptocurrency infrastructure. Looking ahead, Intel's ability to sustain this momentum will depend on its continued innovation and adaptability within an ever-evolving market. The company's strategic moves could redefine its long-term growth trajectory. In a surprising development, Ethereum whales are reportedly beginning to sell off significant portions of their holdings. This trend has raised eyebrows among investors, as it could signal a potential shift in market dynamics. Whales, who are large holders of Ethereum, have historically influenced price movements due to their substantial positions. Recent data shows a notable uptick in sales, prompting speculation about whether this is a strategic exit or a reaction to increasing market pressures. Analysts suggest that this selling could lead to a dip in Ethereum's price, especially as broader economic conditions remain uncertain. The implications of such actions could resonate across the entire cryptocurrency market, impacting investor sentiment and overall market stability. Furthermore, the decentralized finance sector, which heavily relies on Ethereum's blockchain, may feel the ripple effects, potentially stalling innovation and investment. As Ethereum continues to evolve amid regulatory scrutiny and competition from other blockchain platforms, understanding the motives behind these sales will be crucial. Investors should prepare for increased volatility as market forces interact, with close attention needed on whale activity in the coming weeks. Recent regulatory changes in the cryptocurrency landscape are igniting intense debates across various sectors. Lawmakers are proposing new frameworks aimed at providing more clarity and security for investors, responding to growing concerns about market manipulation and the need for investor protection. This push for regulation follows a tumultuous period marked by significant price volatility and high-profile scandals. Proponents of these regulations argue that clearer guidelines could pave the way for increased institutional investment, potentially leading to greater market stability. Conversely, critics warn that excessive regulation could stifle innovation and drive emerging technologies outside of the United States as businesses seek more favorable environments. Cryptocurrency exchanges, which play a pivotal role in the ecosystem, are particularly concerned about how these regulations could affect their operations and user engagement. As discussions evolve, the ripple effects of these regulatory changes could reshape not just the cryptocurrency market, but also influence traditional financial systems. The outcome of this regulatory debate will likely determine how cryptocurrencies are perceived and utilized in the future. Stakeholders must navigate this complex landscape carefully, as the decisions made today will set the tone for the evolving relationship between cryptocurrencies and regulatory bodies in the years ahead. In a remarkable turn of events, Bitcoin has surged past the $80,000 mark, reaching a new all-time high. This surge is attributed to a combination of factors, including increased institutional adoption and a favorable regulatory environment. Over recent months, major financial institutions have begun to embrace Bitcoin, recognizing its potential as a store of value akin to gold. Analysts suggest that Bitcoin's price is being buoyed by growing demand from both retail and institutional investors who see it as a hedge against inflation. The recent bullish sentiment in the market has also been fueled by announcements from major corporations, such as Tesla and Square, embracing Bitcoin as a legitimate payment method. These endorsements have not only enhanced credibility, but also increased mainstream acceptance. As the market continues to evolve, Bitcoin's dominance appears to be solidifying, prompting discussions about its long-term sustainability and potential integration into global financial systems. However, some analysts caution that this rapid increase could lead to a market correction, as speculative trading often accompanies such volatility. Investors are urged to tread carefully as they navigate this unpredictable landscape. The question now is whether Bitcoin can maintain this momentum, or if it will face significant pushback in the coming weeks, with many anticipating that regulatory developments could heavily influence its trajectory. Thank you for watching. Which story shocked you the most? Don't forget to like and subscribe for more updates.